Yo, what's going on everyone? Welcome to the second video of order blocks. This video is going to be on identifying your points of interest and understanding which order block is more stronger and which ones are weaker. And also I'm going to be showing you guys how to identify your POIs and etc. So we have three different concepts, or rather confirmations, that go inside of the concept of order blocks to find out which OB will actually hold and which one won't. So the first one being an order block that swapped liquidity, the second one being an order block that cleared imbalance, and then the last one being order block that broke structure. So I'm going to be going over each and every single one of these, starting with the first one. So right here you can see that one, the market is pretty bearish, right? We're in a downtrend. Market is creating lower lows, lower highs, pretty obvious. And then just over here, right, out of nowhere, just over here, the market creates this last down candle before this major move up, right? Like, I know it's kind of weird because it has like the lines, but yeah, it creates this one last down candle before the major move up, and that it also breaks structure towards the left right over here. We have a BOS top, so we also broke structure. So this is a certain confirmation that you can use for your order blocks to find out which one is more like powerful. So if at the end of a downtrend, let's say the market reverses and just completely goes up, like literally just completely goes up, if that does happen, then look in that area of where the market started its move up. So you see how I said the market like randomly is selling off and then randomly it goes up? Inside of this area over here, you want to be looking for institutional candles inside of that expansion move up, right? So in this case, that is one type of OB that we can use that has more confirmation, right? And I'll be showing you like guys live examples as well, so don't worry. And then we have the second one being an OB that cleared liquidity. So we can see that there's equal highs and then there's equal lows, meaning there's liquidity both sides of the market. And obviously this is like a currency for the market maker. It needs to come down to take out that money. So we see that the market makes this one last down candle before the major move up. So this move cleared liquidity, right? So this is that last down candle that cleared liquidity, and then the market goes up. So most likely the market is gonna come back down towards this last down candle to this last down candle to retest it and then go higher. Just like I said in that last video, order blocks get retested, aka mitigated. So the market is gonna have to come back down to that last down candle where it originally started, and then from there go up. And then the next one being one that not a lot of people talk about, but it's an order block that swept IPA or cleared IPA. So we can see right over here from this wick to this wick, we had inefficient price action where the market was pretty unfair. There was an imbalance. And by the way, so green means bearish, red means bullish. I messed up on this, but yeah. So there's inefficient price action right here. Price was unfair, and then you can see that the market went up to clean that imbalance, to mitigate or clear that imbalance, and then it printed a second down candle, a bearish candle, right after that major move up. So we had a small move up that cleaned the IPA, and then a major move down right after we cleaned it. So basically, the OB that would be really strong in this situation would be this last up candle before the move down, specifically because we cleared IPA. Now I'll give you guys an idea of how you can actually mark up your points of interest, and how I do it. So like I said in the last video, we're looking at swing point lows and swing point highs, basically untested levels. So in this case right here, we can see the market was really bearish. It was selling off, selling off, and then right when it reached this point over here, we had this major move up. So let me just identify the trend, or let's identify the institutional structure. So we have a high right here. So we have a high, and then I guess you could say low right here, low, and we have a lower high. Oh, I hate doing this. It takes so long, but yeah, lower high, lower low, right, and then we have a lower high right here, and then a lower low right here, I guess, lower high, and then lower low. So we have these lower highs and lower lows, right, in the market. Now as soon as price came here and printed this lower low, we had a major impulsive move up that broke structure towards the left. So we broke structure. So we're breaking previous price action or previous bearish structure, which is identifying that now the trend is potentially going to be bullish. Now also look at the volume and momentum inside of this specific zone, right? We can see that inside of the zone, the market, like randomly, it was super bullish and had so much momentum. And if we look a little bit, if we actually draw like a horizontal line to look at the path to see if there's a order block in the past that is reacting off, we can see there is this last down candle right over here, which is considered as an OB that the market is reacting off of now. So it makes sense on why prices went up from here. So it went up from here and we broke structure. Now after it broke structure, after it broke structure, let's analyze what's happening right over here. So technically speaking, we can say that all that's happening is liquidity is being generated left and right. So we have liquidity right over here. Liquidity. So we have equal lows happening right here. So we have a test of support, another test of support, another test of support, meaning all these people that are retail traders that are buying these support touches, they're getting induced to take buys because they see this as a level that rejects, and then take profit there and stop loss like right below here, whatever. So basically, obviously that means that liquidity rests below over here, and money is gonna have to get taken out. Now after that money got taken out, what that identifies to us is that retail traders are being stopped out, but we also have to understand that there's still stop losses over here that the market hasn't taken out, right? So I want everyone to, whenever you're looking at a chart, you make sure you're marking up where the liquidity lies, so where the most equal lows and highs are. So in this case, I know that there's money over here, so we know that the market overall has to go up. So now let's mark up our confirmations. Break of structure and LQ resting of sellers. Q. So we have two confirmations now telling us that we have a break of structure, which does identify that the overall trend can potentially be switching from bearish to bullish. And now we also have liquidity resting of sellers, right? So right over here, the people who are selling, their stop losses above that the market has to eventually go to take out. Now, like I said before, what we're going to be doing is we're going to be focusing on the overall the start of the move that broke structure. So this is the start of that move that broke structure, right? So what we're going to be doing is we're going to be looking at points of interest, aka so we're going to be looking for points of interest, aka order blocks inside of this area. But then someone might ask a question saying, okay, if I go down to the 1 hour time frame, there's multiple order blocks. There's one over here that already got tested, there's one over here, and there's one over here. Like, which one do I take? So this is my idea. So what I usually do is I take my fib. Let me even find my fib quick time. Right here, I take my fib, right? And I usually measure from the low of the expansion up to wherever the expansion finished. So in this case, the expansion started right over here and it finished right over here, from here to here. So I would measure my fib from the low up to the high. And basically my major keys of it, my major levels of interest rather, are gonna be any order blocks that lies in the 70, 78, or the 88. So any OBs that are inside of these zones, these are my points of interest. It's much more stronger and probable, and I'm gonna be rather focusing on those. Now, if there's order blocks that rest above, such as like the 61 over here, or the 50, or even higher, I completely ignore them. I don't take them at all, right? And someone might say, okay, wait, can't you do the same with this move right over here? Like take your fib from this low up to this high. You can definitely do that, right? This is also this is also plausible. You can look for order blocks that are inside the 70, 78, 88. Now the reason I didn't do this is because I already know what's gonna happen. The market breaks past it, it doesn't respect this. So this is something I want you guys to keep in mind, that there are going to be points of interest. Like for example, right here we have the expansion move up, and then we also have another expansion move up. Both of these levels are valid, but that doesn't necessarily mean that they're both going to hold, right? So one could be stronger than the other, and it's just normal market tendencies for it to not respect a one order block and move to a different one. So even though the confirmation might be here for this one, that doesn't necessarily mean that it has to respect this one. It could easily mean that the market might go lower to use a lower order block. And in this case, our area of interest is going to be this last down candle before the major move up, right? So this is going to be our area of interest. Now the reason I'm using this one is because, one, this is the start of the move. Two, this last down candle before the move up broke structure. And three, we also cleared liquidity. If we check the 15-minute time frame right over here, one thing that you can notice is that there was actually a ton of, I guess, support traders buying this area right over here. let me delete this right here. So we can see that this is a level of support that tons of traders were buying right here, right here, right here, right here, right here, and right over here. And then boom, we have this last move down that swept all that money that rested below. So all these people that were buying over here, they just got stopped out. Once they got stopped out, the market completely pushed up and broke structure. Now if you go on the 4-hour time frame, it's so clean. This is just one major last down candle before a move up that's basically considered as our order block, which is really clean, right? So now we have a bunch of confirmation. One being that this is the start of the expansion, two being that it broke structure, three being that we cleared liquidity, and the fourth confirmation being that there's a lot of volume and momentum now, right? So we have 4 confirmations just inside of this order block on why the market needs to come back over here, and 5 being that we have the fib confluence. So what I would do is I would take my zone, right, and let's see, yeah, just highlight the open to the low of the order block. Let's make this like yellow or something. And then at this point, I would wait for price to come into my OB. Now you could go to the 1-hour time frame and refine your order block a lot more nicer. So you could refine it up to this last down candle before the major move up if this is like too big of a zone for you. But we'll get into refining entries in a different video, because that's like a whole new topic I want to cover later on. So yeah, this would be our OB that we'd be focusing on, and price action would slowly make its way back down into our area of interest. Now, one more thing I want to call out. So one thing I want to say is that sometimes you're going to notice that the market is going to consolidate before it actually comes inside of your point of interest. So for example, right here, the market was pretty bearish, and then boom, notice how it started consolidating after that push up. Basically, this is a good confirmation that the market is getting ready to go up. It just wants to stop out and confuse any retail traders before it actually does make that major move. I say this because obviously the market, it likes to make those big moves when no one's expecting it. No one's going to be expecting a major move up if everyone's focused on this like support resistance range. So that's why when everyone does get stopped out, the market goes to the untested level that had that expansion. It's like a magnet. It goes back down to the untested level that had an expansion, and from there it goes up, right? And that's basically how the market moves, and that's exactly what happened. This is that major level that had an expansion where we seen the start of that expansion, and then the market comes back down into that major level. We see that there's an order block inside of it, and then the market from here we can just see what it did. You can see from here it just completely went up. And notice how it went to the order block, it went to where the liquidity rested. In this case, the liquidity rested just over here because we saw that there's equal highs over here. And that's why we took a buy, because one, we know that the liquidity was buyer side. We know that the market has to make another move up to take out the liquidity that rested above. And two, like I said, we have that order block that cleared liquidity. Now, if I go on GBP USD, which is one of my favorite pairs, I go to the 8-hour time frame to just delete all this. Right, this is one thing that I wanted to show you guys on GBP USD. It's a perfect example of OBs clearing liquidity and stuff. So basically, on GBP USD, starting from here, we can see that overall it's moving bullish, right? Trend is bullish, and if the trend is bullish, that means that we're only looking for buy side order blocks. Never ever look for sell side order blocks in an uptrend, and don't look for buy side order blocks in a downtrend. The reason I say this is because like if the trend is moving high and you see an order block right over here, what is the market gonna do? Is it gonna respect this order block in reverse, or is it gonna like, you know, probably break that order block? Because long term we're still being bullish, we're still going higher. Like for example, right here we see this like we see right here a last down candle before a last up candle before a major move down. Market comes into it once, reacts a bit, and then from there it just completely reverses and goes up. Right, it's because overall the trend is up, so most likely the market is just going to completely break the previous highs and make newer highs. And yeah, so GBP USD, where was it? Yeah, right here. So basically the market moves in ways of liquidity, right? So over here we can see that the market is in a consolidative manipulation phase right here. Let me just mark this up. Boom. And then same thing just over here, manipulation, also right over here. We can say that over here there's manipulation. Now, this is what I want you guys to focus on. You see every time the market consolidates, it's just creating liquidity. We already know this, right? The market is generally just creating liquidity. Even over here, we can say the market was creating liquidity. Now, once we create liquidity, where does the market go? Well, let's look. It creates a low, it creates a high, creates another low, it creates another high, I guess up to here. Now, if I were to ask you what's the major expansion, me and you would probably say it's either this expansion right over here, or it's this expansion right over here, right? Because this and this, these are both the major moves up, right? So we have the high, higher low, higher high. So let's focus on this area for now. The market created liquidity, right? Created an area of liquidity where retail traders were buying. Retail traders are buying over here. Now we know that the market has to come back down. We already know that the market has to come back down to take out all these stop losses. Now, if we were talking about where would it go, we would simply just look at that area that was responsible for the market expanding. So in this case, it would be either this order block right over here, right? Because this is that area where the market first expanded, or it would be an order block right over here. And in this case, the market comes back down after it takes liquidity, and it comes into this area of interest. Now if someone asks me like, okay, why did it come to this one and not this one? All I could tell you is that the banks and institutions, they have different goals, and they have different types of ideologies of which area they want to use and which one they don't. Even though this one is a lot more cleaner, the last down candle before the major move up, the bank still decided to use this one. So when people say, how do you know 100%? The truth is you don't. Rather, you're just reacting off of what you're seeing. So even though we see this last down candle over here, the market still used this one. So it's really important to remember to have all your levels of interest marked. Obviously, you don't want to mark every single OB, but it's good to have your levels, like not just one, but two levels of interest marked. In case one doesn't work out, you can go to the next one. And that's where risk management comes in, because you know, if I'm entering over here and I did get stopped out, I'm only risking 1%. So even if the market comes down here, I could potentially use this one. But yeah, that's besides the point. So then right over here, the market consolidates once again, right? And we can say that it created equal lows and equal highs, or equal lows and equal highs right here. It created a range of liquidity, and the market obviously has to break out the lows to take the money of the lows out first, and then it has to take out the highs. So now the market breaks down to take money of the lows, but where does it go? Well, it's reacting off of this last major down candle before the move up. Notice how every single time the market's coming to an area of interest, it's either the start of the expansion or the next expansion. So in this case, right, this is the first expansion, this is the second expansion, this is the retracement, right? So first expansion, second expansion. See that? So the market is going to be going to these untested levels of expansion, and notice how it's not going to the middle or the highs. It's always going towards the low. It always comes deep. It makes a deep retracement. I'll give you guys another example right here. So right here, the market cleared liquidity, right? We see this move down that swept liquidity, and the major move up that broke structure. And I'll show you how it broke structure. Right over here, right over here, we can see that the market gave us a proper break of structure. So once the market swept liquidity and it gave us a break of structure, that's two confirmations already met of my order block. Because remember, if an order block sweeps liquidity or breaks structure or clears IPA, these OBs are much more stronger. So in this case, what I would do is I just take my horizontal rate and I would mark up my my high to the low. And in this case, you literally would have missed it by a pip. Your entry would have been missed by a pip because of spread and probably a bunch of other stuff. But look how accurate that was. It literally missed your entry by a pip, and then you could just target like the next high. But it just shows how accurate this really was. And the market came back down to that overall level where the market first expanded, and it used it as like a magnet. It literally it literally mirrored that same image. The market came here once and pushed up. It came back down into that same level, pushed up again. Now, another example right here. We have this level where the market is creating liquidity, both sides of the market. Equal highs, and then it's creating equal lows as well. Liquidity clears. Wrong thing, my bad. LQ cleared. LQ cleared. So we're creating equal highs above and equal highs below. Now the market left a really clean last down candle before the major move up, and that also broke structure right over here. We can say that this broke structure right here, or technically continuation of structure, but yeah, whatever. So it also gave us a continuation of structure, right? So now if I said, all right, which area of interest is the market going to use? We already seen this, it's hindsight, but obviously it's going to either be this last down candle or it's going to be this last down candle over here. And in this case, you could see that the market ended up using this last down candle over here. And which one did it use? Well, it used the ones that had that major expansion. So we have the first leg of our expansion, and then we have the second leg of our expansion. It's literally just reacting off wherever the expansion is, wherever the expansion started. And then from there, you can say that after this right here, you can see that the market swapped liquidity. So this order block was responsible for this liquidity grab. Not only that, but this OB was also responsible for giving us another continuation of structure. Not only that, but this institutional candle or order block was also responsible for the market having this major impulsive leg right over here, right? Now, some might say, okay, there's order blocks all over the market now. There's an order block right here, order block over here, and order block over here. Technically speaking, all of these order blocks are correct. They all work out. They're all right. But it's just about the ones that are higher won't give you those big 200 pip move that you're expecting. They're just going to give you intraday moves. So for example, let me actually change this color. It's really ugly. So for example, right here, we have an area of interest right here, and the market reacts off of it pretty nice. Reacts off of it pretty nice and gives you a small like 183 pip move. Or sorry, it gave you more than that. Yeah, so that was a bad example. Let me use this one over here. So we have this last down candle before the major move up right here. The market comes into here and it gives you a really nice 200 pip move up. After that 200 pip move up, it goes back down. So it gave you a small intraday move and then it came back down, right? Now, where did it go? Well, like I said before, it went to the normal area where the expansion started. So technically speaking, our area of interest would want to be right over here, this last down candle before the major move up. But what we see is another area of interest, this last down candle before the major move up, and these are both valid. These are both valid areas of interest, right? So someone might say, okay, so which area of interest are we going to focus on? Well, like I said before, you don't know. It all depends on confirmation. You need to wait for price action to come into the area of interest, play out, go on the smaller time frame, look for confirmations of that trade entry, and then take it depending on your confirmation checklist. If you see confirmation in this one, take it. If you don't take it, wait for this one. If you do take this and get stopped out, only risk 1% of your account, and then you can focus on this area of interest instead. But so let's use the Fibonacci. Let's take my fib from the low to the high, and like I said, we're only looking at order blocks that are in the 70, 78, and 88. In this case, we have a perfect order block aligned entry at the 78%. So that means that this order block is much more stronger than any order block over here or over here. So when price did come into my area of interest, what I could have easily done is I could have gone to like my 15-minute time frame. And when I'm on my 15-minute time frame, all I really need to do is look for confirmations of taking a trade. So now the market is pretty bearish, right? We've seen the market is selling off. It's really extremely bearish. Sell off, lower low, lower high, boom. So okay, wait, let me go back up here. So we could have low, lower high, low, lower high, lower low, technically equal high. There's consolidation, and then we had that major breakout right over here. So the market breaks out, right? We see that breakout. Now once we do see that breakout, what are we going to be looking for? Same concept. Look at that expansion of that breakout, which was right over here. This was the expansion of that breakout, correct? So let me highlight that. This was that major impulsive move that broke structure towards the left. It broke structure. Now, where did the market come back to retrace? Well, it came back into an order block that was inside of this expansion. So what you want to be doing is you want to be looking on the 15-minute time frame of how price is reacting inside of your zone of interest. Once you see prices moving bullish, right, it was pretty bearish. Now we're seeing bullish action after price came into my area of interest. At that point, that's when you want to start looking for your trading opportunities. So in this case, once I see this break of structure, This order block is so strong. On the 1 hour is really clean. Let me go back to the 1H. But this OB right here is so strong because one, this is responsible for that break of structure. Two, we swept liquidity. Look at this. Right here, equal lows, liquidity clear. We had this level of support being formed right over here, right? You guys see that? We had a touch right here, a touch right here, touch right here, touch right here. Retail traders are seeing this as a good time to buy, not knowing that there's liquidity resting below. The market takes out liquidity and then goes up. So this order block, one, it took out liquidity. Two, it's responsible for this break of structure. And three, it has so much momentum and volume with these bullish candles. So now then what we do is we set a limit at this one because we've seen that break of structure. And look how accurate that entry was. Now you can either put your stop loss inside or you can put it below. I would just put it inside realistically. I think you get stopped out on this because it comes back. Oh no, you don't. So yeah, my entry would have just been over there. And then take profit could be literally the next high right over here, right? So this could have been the next high. Now someone also might say, okay, wait, why didn't you look for re-entries over here? When price came into this area of interest, all right, the first time it came to my area of interest right here, we seen that the market technically expanded right over here. So yeah, you could have also easily done that. We have a really clean last down candle before the major move up right here. So this could have also been your level of entry. So let's say we did enter over here, stop loss at the low. At this point, we would just target the next high. Or you could hold it to long term, whatever you want. Now, if you did hold it long term, you would have got stopped out because the market came back down. But just because you get stopped out, that doesn't mean that you're wrong. Just look for reconfirmation. For example, right here, we can see that the market was creating liquidity at the lows. We had an equal lows right over here that the market ended up taking out. After it took out the equal lows, we had that major move up that broke structure. And then the market came, tapped us into the pip. And then from there, it created that major impulsive move back up. Now, one more thing I want to talk about order blocks are imbalances inside of your order blocks. So, let me delete everything right over here. So, imbalances inside of your order block. Let me mark this up right here. Let's see if we can find anything important. So, on the 15-minute time frame, look at this. On the 15-minute time frame, here to so this is one whole 4-hour order block right here. So I'm gonna mark this up from here to here. This is one whole 4-hour order block or institutional candle. Now if we look at this, like, you know, we refine our order block to this last down candle right over here, what we can see is that there's so much imbalance just resting inside of our order block right here. Like, look at this. From this wick to this wick, there's imbalance right here. There's IPA inside of this 4H level. If you go back to right here, there's an IPA inside of this 4H level, like I just said before. I'm just repeating myself now, but how far did I go? Yeah, right here. So if there's imbalance inside of your OB, that increases the odds of price actually using your order block to go higher. So we seen that on the 4H, it was just one big order block, right? But then if we went down to the smaller time frame, we saw that there was imbalance inside of our order block, and that increases the probability of the market using it, and hence why the market came down to the pip. You know, it came down, wick down, and then after wick down, it completely shot up and continued its bullish structure up. Now I want to talk about one more thing and how we mark up our points of interest correctly. So right here, if I delete everything on GU and I was looking for buy side opportunities right now, how would I do it, right? Well, first thing first, let's look at what the market did. So the market came down, right? It came down, it created equal highs right over here. Created equal highs and then it created equal lows. Now the equal lows got taken out first, right? And then it used a higher time frame demand zone to go up. Now once we took out the equal lows, the market was obviously going back to where the equal highs were because it needs to clear those. Now right over here, we cleared the equal highs with this one expansion move right here. Now what I'm gonna do is I'm gonna highlight my expansion zones, one being right over here and the second one being right over here. These are my expansion zones. Now these are my levels where I'm going to be looking for institutional candles at. First institutional candle right over here. We have this last down candle before the major move up that broke structure right here. Break of structure top right there. Now second one, well, this is our first level of interest being right over here. I'll change this to like pink, whatever. So this is one point of interest that we'd be waiting for price action to come back down into. Now, where's our second point of interest? Well, we know that it's going to be inside of this zone, but let's look for where the most bullish pressure was. In this case, we had a last down candle right over here, but it kind of got mitigated a bit, right? It didn't really test it, but in my opinion, it was close enough to where it almost got tested. So to me, it is invalid. I wouldn't use this point of interest anymore. We had this last down candle, already got tested. But then if we highlight the zone now, and we do it up to here, now it's so much more cleaner. This is the major expansion that went up. So what I would do is I go down to the 1 hour time frame, and I would take my fib from the low to the high of the expansion. In this case, you could do it from this low or this low. Let's just do it from here up to here. Now, where are our zones of interest? It's gonna be inside one of these levels, the 88, the 78, or the 70. In this case, we have 2 points of interest. One being one last down candle before the major move up right over here, and the second one being this last down candle before the major move up right over here. Notice how simply I did that. I simply focused on the expansion and I ignored all this consolidation over here. Now someone might say, okay, wait, what about this one over here? Isn't this technically a level of interest? Now the reason I wouldn't be focused on this one is one, because it didn't break any structure, right? As you could definitely say that this is the cause of all this over here, but me personally, I like to focus on the expansion of the move. In this case, this is the expansion. This is the start of that major move up that broke structure towards the left, right over here and over here. So at this point, I would focus on these two levels, and maybe we can even go down to the 30, look for more levels. And look, you can refine that up to this point of interest right here, and refine your OB up to this last down candle up to there. Right, so that's how simple it really is to mark up your areas of interest, and I'm simply focusing on the start of the expansions that are untested levels, right? So technically speaking, you could like this one over here, honestly, you could still use this level as a point of interest, but this is like a backup point of interest where if the first two levels you don't use aren't correct, then at the end of the day you can use this one as well. Now this one is super like unlikely. There's no way the market is going to make that deep of a retracement. Most likely the most probable points of interest are going to be this one, and this one. And at this point, all you would really want to do is watch out for price action and see what it does in each area of interest, because that's how I'm doing it. I know it's not the best and it's not the easiest because you have to look for confirmation, but trust me guys, this is how I did it. I hated doing this so much, but listen, the more you do it, the more you practice, the easier it gets. So make sure that in each point of interest you're waiting for price to get into there, and then look on the smaller time frame if it's giving you the schematic that I showed you guys before. And if it's giving you guys that schematic, then obviously take the trade, and if it isn't, don't take it, wait for the next one. And at the end of the day, even if these three stop you out, that's negative 3%, because like I said, we're only risking 1% each trade. So if these three do stop you out, we still have this last down candle before the major move up, and we wouldn't use this one because this is already tested, right? So that's basically how I mark my points of interest, which order blocks are stronger, which ones aren't. Oh yeah, so don't use sell side order blocks in a buy side market. I already said this, but don't do that. It's not going to work out your way at all. It's the worst. Don't do it. And yeah, that's basically it on which order blocks are stronger, which ones aren't. If you guys have any questions, rewatch the video. I like to keep everything simple, so hopefully this was easy to understand. But anyways, take care, have a good one.